Former Governor of the RBI, Raghuram Rajan, in a recent interview with the Times Network, commented on the ongoing feud between the government and the Reserve Bank of India. Raghuram Rajan said that it is worrying if the situation is so precarious that Section 7 might be invoked. He added that mutual respect between the two institutions is imperative.
Let's back off a little from the current controversy and just think a little bit about what really the relationship between the central bank and the government is. Ultimately, a good analogy, I think Dr. Viralacharya talked about T20 and test match, but I think a good analogy of what the central bank is it's a seatbelt for the government, which is the driver. The driver can decide whether to put on the seatbelt or not, and if the driver doesn't put on the seatbelt, which is useful, the seatbelt is useful in times of a crash. Now think of the central bank as thinking about that crash and saying, I want to protect financial stability because I don't want that to be a terrible event. And of course, the driver is thinking about the process of normal driving and says, well, I want to be relatively free of constraint. But when they talk to each other, they realize there is some value to putting on that seatbelt because it prevents the really unfortunate eventuality. And, if we want to extend the analogy further, one can think of Dr. Acharya's speech as basically being that warning which comes on when you don't put on your seatbelt, saying, put on your seatbelt, and hopefully eventually that warning is adhered to. Now, the historic relationship between the government and the RBI has been based on the fact that the government naturally and correctly thinks about pushing growth. And for that, it wants maximum freedom given to all the entities who are responsible for growth. While the RBI focuses on financial stability and says, here is the amount of growth I can allow without impinging on financial stability. And they work with each other on that basis. The government always pushes the innumerable letters on my table coming from the government saying, relax this, relax that, relax something else. And they knew that we would look at the letter carefully, take a view, but that view would be saying, how can we maximize growth while protecting financial stability? And then when we said no, they would go away and say, okay, fine, they've thought about it. And 2 days later, another letter would come on some other issue, and they would keep trying to press the boundary. Ultimately, the responsibility was for the RBI about financial stability, and if we failed on it, we would be held to task. So given that responsibility, we had the authority to say no. And let me remind you of that quote in Dr. Subbarao's book, where he talked about the relationship between Dr. Reddy and Mr. Chidambaram based on a phone call, where Dr. Reddy's side he was hearing, and Dr. Reddy said no, 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 and yes, eventually. And when Dr. Subbarao asked, what were you saying no to? He said, he asked me to relax this and relax that. And I kept saying no. Ultimately, he asked, can you hear me? And I said, yes. And that's how the call ended. But that, I think, anecdote is really about the relationship between the Reserve Bank and the government. The government appoints the governor, appoints the deputies, but ultimately goes by the views, knowing these are professionals. They're not doing it for political reasons or for their own self-interest. They're doing it because they've taken a view on the ultimate stability of the country.
I'm tempted to ask you if the two can be friends, because one is a technocrat, the other is a hard-nosed politician, and I'm not referring to individuals here. I'm really referring to the two men who head it. The RBI governor is supposed to be a technocrat with this team. The finance minister of New Delhi are hard-nosed politicians with very different objectives. And you're right, your table must have been laden with letters from New Delhi. But in some sense, are these two men or women, hopefully in the future, from Mars and Venus, where the two are going to disagree because they've got two different objectives, and it's going to be elusive for us to try and bring them together?
No, I think it is possible to disagree but still be respectful of each other's territory. And I think certainly in my relationships, there were many disagreements. But I hope there was an understanding that this was not because of bloody-mindedness, but because there was a worry. And they knew when the RBI said yes, it meant we were taking responsibility for the financial stability consequences. And we always tried to maximize the potential for growth while keeping that financial stability concern. And this is what sometimes in the commentary out there in the press, I think people don't understand. Of course, the RBI is essentially, in some ways an agency of the government. And of course, it has to respect the overall sort of concerns and objectives of the government. But the government has entrusted it with the responsibility for financial stability, and therefore it has to, as a good responsible entity, carry out that responsibility. And sometimes, as I said, the seatbelt constraints. But that seatbelt constraints because you put it on, and you put it on knowing that it will prevent you from an accident.
I know while many letters have been laid on your table and they've been laden with demands from the central government, but in a lot of ways, I have to refer to Section 7 and the possibility of it being invoked, sections of it being invoked. Do you believe, and my question is, under what circumstances is invoking of Section 7 really justified, or are these nukes that should never be used?
Let me put it this way. First, Section 7 hasn't been invoked. So that's the good news. And I do believe that when the relation gets so precarious that it has to be invoked, we have to be very worried. That said, I think the dialogue between the Reserve Bank and the government is always an ongoing one. There are always sort of points of view being expressed. Sometimes there are sort of disagreements. But ultimately, it works based on respect. You have to know why the other guy is doing what he's doing. And ultimately, at the end of the day, you have to part, maybe not as friends, but as respectful of each other's territory. It's when you encroach on each other's territory that it becomes problematic. And I would hope that that respect gets reestablished.
I kind of agree with you there, but I want to talk about a substantive issue of disagreement, and one of them is liquidity infusion in the markets right now. The government is very insistent that this must be done to bail out the NBFCs that are facing a cash crunch. The RBI believes there's enough liquidity in the system, and that is really a judgment call for the central bank to make. But is this really, a cry for more funds, or is this more funds required to avert a bailout, avert a superstition by the government of many more NBFCs like ILFS?
So, look, I think that I don't want to get into the specifics of the case because there's more information than I have on the specific frailties of NBFCs. But generally, in a situation where there is financial stress, the central bank has to figure out whether it's ultimately a liquidity problem, that is, infusing liquidity into the market will resolve some of those issues, or is it a solvency problem? That is, some of these entities have taken on really bad assets and really they are decapitalized. So the reality is, if it's a solvency problem, that doesn't mean that the government and Reserve Bank shouldn't intervene. But it really involves the fiscal use of funds, and therefore the government has to be directing that and putting taxpayer money at risk. Now, that's a big political issue because you're using taxpayer money to bail out a private entity, and people will ask, these people who made money over so many years, why is it that you're bailing them out? That was obviously a big issue in the United States when the bailouts took place. If it is primarily solvency, you can address that by infusing liquidity into the market through more OMOs. And if the problem is you need liquidity directed to certain places, perhaps lend to certain entities who can make those loans. I think the recent move to allow sort of banks to guarantee bonds by these entities is a good one. That said, I think any kind of intervention should come after the entities that are in difficulty have taken their own steps to bolster their balance sheets. If your view is your commercial paper is coming 6 months from now and therefore you're worried about rollover, shouldn't you be raising equity now, even if prices are depressed, in order to back your balance sheet? That would be a good signal that, in fact, it's not directly running to the government and the central bank to bail yourself out, that you're willing to take all the steps, and it's only when all the markets are frozen that you go, at which point the government has to decide, is it a liquidity or a solvency? If it's a solvency, it may require wiping out the equity of these entities and taking them over, as, for example, I think ILFS has been done.
Well, ET Now's Supriya Srinath conducted that interview. She's joining me on the phone line now. Good morning, Supriya. We just heard that interview. Now, some of the big takeaways, if you could highlight it and underline it for us, especially with respect to the relationship, the kind of collision course that we have seen between the government and the RBI. Can you take us through the main big takeaways that you can highlight for us, please?
So you raise an important point because Raghuram Rajan is India's ex-RBI governor and one of the most celebrated economists in the world. His voice will matter on this entire issue about the government versus the RBI tussle. And he's spoken not just in lofty generalities, but he's spoken to us on specific issues. He's spoken to us on liquidity infusion. He's spoken to us on NPAs. He's spoken to us on the speech that the RBI deputy governor made, which was the wrath of the market. And, I asked him specifically, isn't that too inappropriate at the central bank to speak on? He also then, of course, goes on to talk about, he gives his own analogy. And he says that the RBI is like a safety belt and the government is the driver. And if you wear a safety belt, the chances of an accident, you will be less accident prone. And that is exactly what his prescription is, that the RBI and the government should respect each other's territory, should respect each other's turf, and back off from a high-cost collusion like this. Of course, Raghuram Rajan is one of the most respected voices in the world of finance as India's former central bank governor. He was a very assertive central bank governor. He does believe that both RBI and government, from this high point of tension and tussle, right now needs to back off, and only then they will be peace. He, of course, goes on to say that RBI is a subsidiary. It is an arm of the government. It is not meant to take on the government, but the government has to realize why that subsidiary was set up. And subsidiary was set up because they needed a certain function to be done. And so now the government can't go and destroy RBI's autonomy and independence. So it's a very hard-hitting interview.
Right.
Big takeaways. He's spoken on crony capitalism. He's spoken on the political will to recover NPAs. He's even spoken on the defaulter list that he submitted to the Prime Minister's office. And he said, my job was to submit this list. If only 2 or 3 people were brought to book, it would have sent out a signal that India is not going to be fine and India will not just watch NPAs in the making and people fleeing the country. That is very important. He said fraud cannot be eliminated, but what he essentially propagates is we have to put a mechanism which disincentivizes fraud. And that's his big takeaway, really.
Right. And, like you rightly said, and also I think Raghuram Rajan argued this extremely well when he said that it is in the interest of the government to follow the precautions or to use the RBI as a sounding board, and to avert the kind of risks. Because, at some point, I think he did say that the government can decide whether it wants to put on the seat belt or not.
Yeah, absolutely. So he's a very celebrated economist. He was the youngest IMF chief economist. Many people thought he was reckoning for the IMF top job in a few years from now. So when he says that, it is the RBI was set up by the government of India. It is a central bank. It is autonomous. It is independent. The job, look, it's very. I'll tell you something about the RBI and the central and the government. The government is an elected government. It has, elections, vote-backed politics, growth issues on its platter. The RBI is a body of technocrats, a body of experts. They're supposed to do price stability. They're supposed to control inflation. They're supposed to control currency. So the mandates are very different. I think some amount of disagreement is important. Some amount of discord is important because there are two different issues.
Right.
But intellectual disagreement should not make way for absolute hostility. For one part of the RBI, for one part of the central government saying we will invoke Section 7, which will make you direct. He says if that were to happen, then relations have come to a point where we should be very, very worried. Thankfully, Section 7 has not been invoked as yet. But he says relations should not come to a point where there can be no point of return.
Right. He seemed a bit alarmed with the idea of Section 7 being invoked, and he said it's good news that has not been invoked. And Supriya, thanks very much for highlighting the important points there. Appreciate you joining us this morning.